Energy is on fire, surging 3.36% this week, with a bullish trend emerging. Geopolitical tensions are the catalyst, threatening supply chains. This is what every serious investor needs to know about energy right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we are navigating a market environment characterized by normal conditions, with the VIX index currently sitting at 18.7, indicating a relatively stable landscape for investors. Within this context, the energy sector has been gaining traction, outperforming the broader S&P 500 index. Notably, the energy sector ETF, XLE, has posted a gain of 3.36%, highlighting the sector's resilience and momentum. Given its recent performance, the energy sector deserves attention right now, as it may present opportunities for investors seeking to capitalize on emerging trends and themes. The sector's ability to thrive in the current market regime suggests that investors are recognizing its potential for growth and returns. As we delve into the intricacies of the energy sector, it is essential to consider the technical and fundamental factors driving its performance. Let us start with the technical picture and what the charts are telling us. The energy sector, as tracked by the XLE ETF, has shown a notable weekly gain of 3.36%, despite a monthly decline of 6.11%. The RSI reading of 38 implies that the sector is currently in a relatively oversold position, which often precedes a bullish reversal. This reading suggests that the momentum is starting to shift in favor of the bulls, and we may see a continuation of this trend. The trend direction is indicating a potential shift in conviction, with the sector attempting to break out of its recent consolidation phase. Key support levels are likely to be tested in the coming days, and if successfully held, could provide a foundation for further gains. On the other hand, resistance levels will be closely watched, as a failure to overcome these levels could lead to a retest of the recent lows. The current move does not appear to be an overreach, and instead, looks like a sustainable breakout, driven by improving sector dynamics. A specific technical setup worth watching this week is the potential for a bullish consolidation, which could provide a launching point for further gains. Now let us look at the fundamental catalysts driving this sector. The energy sector is poised for a significant week, driven by fundamental drivers that will likely influence the performance of key stocks such as XOM/CVX, COP, SLB, and MPC. This week, the GDP advance estimate for Q1 2026 will be released, which could have a notable impact on the sector, as a strong GDP reading could boost energy demand and drive prices higher. The current normal market conditions and a VIX of 18.7 suggest that volatility is relatively contained, which could support the sector's overall performance. The key stocks in the sector are signaling a mixed picture, with some companies showing signs of strength, while others are facing challenges. Earnings reports from major energy players will provide further insight into the sector's health. Regulatory news, particularly with regards to renewables and energy infrastructure, will also be closely watched, as it could impact the sector's growth prospects. The longer-term fundamental thesis for the energy sector remains intact, driven by increasing demand for energy and the ongoing transition to renewable sources. As a reminder, this is educational content and not financial advice, so it is essential to do your own research and consider your own risk tolerance before making any investment decisions. The sector's prospects are closely tied to the overall health of the economy, and with the current macro tailwinds, the energy sector is well positioned for growth. Next, let us talk about the specific risks you need to manage this week. The energy sector is facing a multitude of risks this week, with supply chain disruptions, geopolitical tensions, and commodity price fluctuations being the top concerns. Given the current volatility environment, with the VIX at 18.7, investors should be cautious with position sizing, as even a small allocation can result in significant losses. Unexpected headwinds, such as extreme weather events or sudden changes in global demand, can also impact energy stocks. To manage downside exposure, investors should implement a disciplined framework, including stop-loss orders and diversification across various subsectors. This approach can help mitigate potential losses and ensure a more stable portfolio. By understanding these risks and taking proactive steps to manage them, investors can navigate the complex energy landscape. And now for the strategic outlook, where does energy stand heading into next week? We remain cautiously bullish on the energy sector, driven by supply chain tightness and rising demand. A key theme to track is the impact of geopolitical tensions on crude oil prices. This is educational content and not financial advice. For more insights, like and subscribe to Financial Market Oracle and comment your energy watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.